Hello, everyone, and welcome back to The Exchange, the podcast where we're talking about buying, selling, building law firms, investing in law firms, MSOs, all the things in between that really is the movement of the marketplace for law firms and how to create exit strategies or acquisition strategies. I'm your host, Tom Lenfestey, and I'm excited today because today's topic I think will hit really home for a lot of people planning for exit, looking for acquisition or otherwise, and it's about financing your law firm acquisition. So today's guest, we have Weston Holley, a specialist in the SBA lending for law firm acquisition space. And I'd love to get into it. So first and foremost, Weston, welcome. But you're a VP of commercial lending at United Midwest Savings Bank. But I'd love to get into, give me your story, give me your background, and how do you get into going from, maybe where you started years ago to a specialist in SBA lending? Because I think, that's kind of a niche space, just kind of like ours. So a little bit about your background and how you got there.
Yeah, absolutely. First of all, Tom, sincere gratitude. Thank you for having me on. It's an absolute pleasure to be here. So a little bit about myself. I've been in the excuse me, I've been in the SBA world now for about 8 years. Really got my start at the time was the nation's number one SBA lender. I started, if you look at the loan cycle, I started on the back end, meaning the loans closed and I was on the loan servicing side. It's pretty entry level. Very fortunate for that to really be a sponge and just absorb as much information from the SBA, the loan process. And so I was in deposit ops. I did that for a little while, mastered that role, and then looked to take on more. I moved over to the business analyst side, which is where we really started looking at the financials of businesses, P&Ls, balance sheets. We did quarterly analysis, really understanding how the business operates and what makes the business tick. In addition to making sure that the business is trending and able to make their payments back to us. So once I mastered that, was that?
That's a good thing, right? Yeah.
Yeah, absolutely. That's always a
Yeah.
positive, right? Good
Right.
start. So once I mastered that role, I wanted to transition to the front end of the loan cycle. And so I moved into underwriting to really get a grasp and understanding as far as credit policies, the SBA policies, deal structures, which I'm sure we'll get into later, and just what really makes a good loan. So I did that for about 4.5 years. And then during that time is actually when I met my mentor and now colleague, Shannon Hay, who really saw my drive and knowledge of the SBA product and SBA program. He's been in tax and accounting and professional services for, maybe close to my
Long
lifespan.
Long time. Yeah, I think I first met Shannon in my early years of law practice exchange. So he's been
Yeah.
at it for a while for sure. Yes.
Very knowledgeable, very well known in the industry. So he approached me and said that he was starting the tax and accounting vertical at United Midwest Savings Bank. And so I joined his team, and it's been an absolute pleasure. We are proud to say we've been credited as the number one SBA lender in tax and accounting for the past 2 years, and it's been awesome, and we're really looking forward to making some awareness about us and what we can do as far as being an asset in the law field as well.
Hopefully we can pick your brain on some of those comparables and everything else. But let's start with this, right? And really what we're talking about today is, maybe you have a deal, like you're looking at exiting as an owner of a firm, anything else, or maybe you're looking at, buying a firm, acquiring. And so Weston, you would be the go-to, that we would send, these attorneys to talk to about, if you want this deal financed. But I just want to ask you, like a lawyer comes to you, like we've sent, some lawyers to you or anything else. How does that first conversation go?
Great question. It typically always starts out with, how do I know what I'm buying is going to stay put, right? Because what are we financing here at the end of the day? Essentially, it's goodwill. There's no real hard assets that we can really collateralize the loan with. So that's really the first question, and which really leads us to deal structure and how we can kind of give some comfort for the buyer to really utilize structuring the note or letter of intent, purchase agreement, that revenue is still going to be there, 1 year, 2 year, 3 years after closing? That seems to be the common theme or common question right off the bat is how do I know that the clients aren't just going to leave soon as we close? So what that leads to is, deal structure, as I said. What I inform them and what I like to present is when you're presenting your letter of intent, go ahead and include in the transition period. The SBA does allow the seller to stay around for a year post closing as long as they're in a non-key man role. So right there, you already have 1 year that you're going to have the seller to help provide a smooth transition. In addition to, we can utilize seller financing to kind of have some skin in the game, if you will. The seller's still waiting to get paid. And what we have been utilizing a lot lately, which seems to be very attractive, is instead of seller financing, we present an escrow agreement. Meaning the escrow agreement, we're still going to fund the full amount at closing. So you're utilizing our 10-year term versus the very short amortization of a seller note. However, we're going to set aside a portion that you and the seller agree upon and maybe have some revenue metrics or attention, metrics tied to that. Meaning year one post close revenue hits this, we're going to fund you the full amount. If revenue doesn't hit, then we're going to fund the lower amount.
Right.
And what I think is beautiful about that, scenario is if the revenue is not met, the leftover funds from the escrow is going to be a direct payment to us, as a pay down on your loan reamortizes, and now you have a lower monthly payment.
Sure. I think that's, it's a huge point, Weston, because I think, those first conversations, let's just take as an example, there's $1 million practice, right? It's got a $1 million price tag. And I think that's the part where I really have always taken the position that deal terms matter more than purchase price. Well, let's back up a little bit for those that maybe aren't familiar with SBA lending, right? Anything else. So from an overview, you guys, you are bank lending, you are funding, you are creating that loan. But give me kind of the basics, the higher view. We don't have to go. I know the rules get pretty in depth, good government, regulations, everything else. But
Right.
just how the SBA structures typically look and how those eligibility requirements work.
Yeah, absolutely. So first time acquisition, it's a hard and fast rule. There's a 10% equity injection requirement. There are ways to, again, structure that, if someone doesn't have the full 10% to put down, we can utilize seller financing. You know, the rules do change within the SBA periodically. Right now, the seller can hold 5% of the 10%. However, that 5% does need to be on full standby, which for our loan would be, 10 years.
Yeah, and just to summarize that piece, buyer, if it's $1 million loan again, right? You got to come with 100,000. If you have 100,000, there's ways to decrease that, but you seller to kind of wait on part of that payment or anything else. So really, it's that 10%, capital. So you can buy a practice for $1 million with 100,000, right?
Yep,
Yep.
exactly.
Okay.
And, when that rule first changed that the seller had to, hold 5 for the full 10 years or the full term of the loan, it's like no seller is gonna agree to that. I'm actually surprised to see that there's been several sellers that, as you said, that are willing to do so. So, you know
Well, I think, again, when they're getting more upfront by using an SBA funded, purchase,
mhm,
um, they can give a little bit because a lot of deals are like, would you rather have a seller note that's going to just hold you out there for, a longer period of time, or would you like to get this bigger chunk now? And so I think it makes it work if they're confident with the buyer, right? They like the buyer, everything else, and kind of see how that can work. Absolutely.
right, yeah, there.
All right. So next steps, right? That 10% requirement otherwise, but we're talking about a 10-year loan, correct? Typically.
Yep. So if it's a straight acquisition, it's going to be a 10-year term, 10-year amortization. If there is commercial real estate involved, which we do see time to time, we can utilize a 25-year term. Now, there is a little bit of stipulation there, and I have a great example that came from a referral source from Utah in the Law Practice Exchange. I had a caller, wanted to get their business pre-qualified and essentially, figure out what the best package they could take to market was. And you discussed this in a prior podcast. When you're trying to get multiple offers or really want that best offer, you really need to have a very attractive package. And this directly relates as this particular person was looking to sell their firm as well as commercial real estate. So I explained to her the kind of ins and outs, and it comes down to if the commercial real estate is 51% of the package, meaning commercial real estate is 51, the practice acquisition's 49%,
Mhm.
and we can throw that entire loan on a 25-year term, which is huge. I mean, that's very attractive for a buyer. It's a very low, a lower monthly payment versus, a conventional loan, you're only looking at, maybe 10 years with or something of that nature.
Yeah, if that long. And I think that's that's a key part where it works. And of course, a lot of the professionals that you deal with in accounting and law and that we deal with in law, they do own their real estate office, right? And so for them, I will say, especially depending on the scale or size of the practice, sometimes they have real estate they bought a long time ago. And that real estate is appreciated, and maybe it is worth more than the practice, right? And so, an opportunity for them is to package both. So take me through traditional loan versus an SBA, just kind of on a comparative aspects. What do you think the biggest difference and maybe benefits, especially for this world of law firm and a professional space, of using SBA versus traditional lending?
Yeah, that's a great question. I mean, really, if you think of conventional lending, requirements to bring in are typically around 20-30%. SBA, as I noted, first time acquisition, it's only a 10% injection requirement. In addition to that, the SBA isn't just for first time acquisition. They do have expansion products where we can finance 100% of the transaction. So that in itself, if you're an existing, owner operator, that's huge. You can finance an expansion without putting a penny in. So, that's really, the main heavy hitter, I would say, as well as the terms as we just discussed. Conventional is acquisitions is the 3, maybe 5-year terms, whereas us straight acquisition is 10 years. So it really lowers your monthly payment as you just touched on, Tom. A longer term, longer amortization means a lower monthly payment, which opens up cash flow and all other things for you.
Yeah.
There's a lot of perks to the SBA program compared to conventional lending for sure.
And then SBA really is meant for what size, kind of deals like lending. Where's the ceiling? Where's kind of the floor for you guys typically?
Yeah, so for us, we utilize the SBA 7A program, so 5 million is gonna be, the cutoff there. Really there's no minimum on that. We do have 2 teams at our bank. 150 below would be considered the small team. 150,000 up to 5 million would be with us, considered the large team. But there's no minimum there for that. Just a cap of 5 million.
And just from structural, I think a lot of people probably think, if I go get a loan, like I'm set with you guys, because that's a lot of traditional banking. It's like if you have to, go back through. But let's say a buyer's out there, they buy a practice, and then, in a year they find another practice they want to buy and they want to come back to you. Fully can, correct? They can just repackage it, go back through it. It doesn't, they're not locked in, right? It's not like they have to pay off the first loan before coming back as long as everything's healthy and good.
Great question. And the answer to that is they absolutely can come back to us. No, they do not have to pay off their first note. We actually do kind of pride ourselves as multi-acquisition specialists. I do know there's a lot of lenders out in the space that kind of sell the dream and then will say that this is too fast, too soon, right? For us, speaking from experience and an example, I have a borrower that just closed his fourth loan within the past 2 years. So really what it comes down to is, does the debt service still make sense? And does the narrative still make sense? As long as those are still checking the boxes, we absolutely can still finance that, whether it's 5 months after your initial acquisition or a year past your acquisition.
Absolutely. Because I think right now we've got a lot of interest in, the roll ups, right? And so it's, whether it's a law firm or otherwise, like really looking at, wanting to do more of these. And so that's a relationship they can really look to you guys to do that. Well,
Yeah, yeah. So really, it's one just kind of explaining our process. One, start to finish time frame. How soon are you looking to close? If there's a time frame a deadline you have to meet, it's pretty important. So I'll go ahead and discuss that up front. What that looks like for us is typically it's a 45 to 60-day start to finish process. I'll explain to them what documents we will need up front. 3 years personal tax returns, 3 years business tax returns for the subject business you're looking at, as well as if you currently have a practice itself. In addition, our application, maybe a profile on the subject business you're looking at. Once we get all those documents, I'll do a very, very brief initial spread to make sure that cash flow is there and this looks like something that we can get behind in overall finance. At that point, I will issue them terms. They agree to that, put them into underwriting. Underwriting's typically about a week, and then we'll have an approval within the week, send them the commitment letter. They sign, they move into closing, off to the races to absolutely. And I do get questions a lot about, do I need to look at getting a Q of E myself or, and explain to them that, as you just said, I'm going to look through this, very detailed. You're also going to go through full blown underwriting. They're going to fine cone everything and see if anything stands out or doesn't make sense. In addition to, it's a requirement from the SBA, the Small Business Association, that we get a third party business valuation done as well. So really, when you look at it, there's three levels of us evaluating and really looking at the practice and making sure that you're getting a good deal here and something's not out of line.
Perfect. And that segues nicely into like pre-qualification.
Yeah.
Explain from a seller and a buyer side what pre-qualification looks like for you guys. And really my question is like, is it worth it? Is it truly a value to do that early in the process versus waiting till later?
Yeah, absolutely. I think it's beneficial to start the process as soon as possible. I'm a firm believer if you're looking to acquire 12 months from now, go ahead and start the conversation, right? Figure out what you need to send us and start the process as far as what can I expect, again, time frame. But as far as pre-qualification, we're a historical cash flow lender, meaning, we're our approval is largely based on the historical cash flow of the subject business. So as soon as we can get the tax returns or at least the financials of the business as you're looking to purchase, that's really going to ultimately kind of give us the yes, we're going to be able to do this, or no, it looks like it's a stretch. We analyze that in two different scenarios. One's going to be just the subject business, the core business, up against the new debt. If that checks it, then we move on, checks the box, we move on to the next one, which is going to be the global standpoint. That's really going to be the borrower's, all liabilities for the borrower as well as the new loan, including the business. As long as that all is meeting our debt service coverage requirements, then you have a great chance at being approved. We are going to look at your credit and we are going to look at your personal financial stance. Those may factor in a little bit, but again, the large piece is the historical cash flow of the business you're looking at purchasing.
Well, I just think it's huge. Our encouragement always and where we try to connect is if you're a seller and you're going to market, and if you're listing on our marketplace or we're working with you otherwise, like going and getting pre qualified just lets the buyer know, like, I'm serious and I've
Yeah.
pre-packaged this even further. Right. And if you're a buyer and you're showing up and like, I've already been pre approved, Weston's my guy and he's already pre approved me for, $2 million to buy this firm, it just gives the seller like, we need to talk, right? Like if you up in priority of buyers when you already have put that level of prep and effort into it. So we already talked about a little bit of deal structures, right? Everything else. But anything else as far as like where you typically see, like, is there a typical is there a typical loan package deal structure that you really see or that you guys really like? You kind of mentioned the escrow, but overall, whether it's in the accounting right now or the law firms that you're seeing as far as split, meaning cash down or no, escrow, otherwise.
Yeah. At the end of the day, the SBA requirements obviously have to be met first, meaning if it is first acquisition, 10% does need to be put in. Do we like to see more? Absolutely. I mean, more skin in the game only gives us comfort that, you're very serious about this. You're going to make this work no matter what. Is that a requirement? Not by any means, but that is something that we would like to see and also again just provides comfort in our credit team. Collateral standpoint, the SBA doesn't require any liens filed unless your loan is above 350,000. So again, if your loan is below 350,000, we're not going to require for a lien to be filed. We do like to see that again, we're going to look at your personal financial stance, and if you have some properties and some more funds in the bank, again, that's only going to give us a little bit of comfort, but it's not a requirement by any means that we're going to need that.
right? But
Yep.
how do you get comfortable, like in that underwriting aspect, like those questions, the business plan, otherwise, like how do you get comfortable really lending on the goodwill of a practice? What are those? What are those like drivers up or kind of those negatives down?
Yeah, and that is a question that I do get quite a bit, and as far as the initial conversations, a little worried about there's not any hard assets here to collateralize a loan. Can you finance this? The answer is yes, we can do that. And really, what gives us comfort in that is tax and accounting, for example. There's certifications and licenses that need to be obtained to be able to run these practices. So that tells us that this is a intelligent individual that can get this done, as well as he has the credentials to back it up. Same with law, right? In addition, we analyze the business that they're looking to buy. And let's just say that the client list, for example, if it's a practice where clients really have, their longest standing client is maybe a year, it's going to be a little tougher for us to find comfort in financing that versus a practice that maybe has a client list that's, averaging 10 years and plus, right? We can count on that reoccurring revenue from those individuals. So those are we can tap into those. And again, the SBA guarantee is largely going to play a big part as far as giving us comfort, on just the goodwill.
Sure. Absolutely. What separates deals that really go smoothly versus those that just hit roadblock after roadblock? Like, what are those factors from whether it's seller, buyer side, anything?
I would say what we discussed earlier, start the negotiations as soon as possible. If you've already discussed with us and kind of got a package together, that's only going to streamline the process. You know what to expect. You know the stages of the loan cycle. Versus someone that pops up and says, "Hey, I need to close next month." Haven't started any of it. There's probably going to be some hiccups along the way. But, we're going to try our best to meet that deadline, but it's just not as smooth sailing as someone, as you said, that get pre-qualified and have those conversations from an early standpoint.
Yeah, we try to be really big on putting the team together, like not before a transaction, whether your buy side or sell side is like right there. You good
Absolutely.
with closing out with some rapid fire questions?
Let's do
All right. I'll throw up some easy ones. Ready?
it.
Easy one first, maybe. SBA or conventional? Which one would you use if you're buying a law firm?
100% SBA. It's funny because my wife and I talk a lot now that I'm very familiar with the SBA. We look at businesses all the time and it's like, well, we only got to put in 10%. So let's let's talk about this
That's right.
versus, again, conventional. It's 2030.
20, 30 shorter term, right? And they work for a lot of deals, right? And there's
Correct.
certain things that those aren't going to be eligible for SBA or otherwise. But overall, I think when it's a goodwill practice, it just makes a lot of sense to carry
Absolutely.
that. Biggest green flag you've seen in a buyer's application. So you get a buyer coming in and they're submitting that. Like, what is that thing that you're like, yes, right? Like as an underwriter or now on the front side of things that you're super excited about.
Existing practice, drop in, big bucks to the bottom line. That's what we love to see.
Yeah, so you're talking proven operator, right? They already got their law firm. They've strategically looked and said, "Hey, this is a geographic market we want to go into. We know how
Hmm.
to run a firm. We've got the financials and history of success to do it."
Yep.
You as a lender are like, "Wonderful, wonderful."
Yes, absolutely. You've proven yourself. The revenue that you're pulling in, the profits you're pulling in. I'm not too worried about the debt service coverage. It's probably gonna probably cover that. So yeah, when
Well, I assume I can guess on this, but what's the biggest red flag then?
right now, I would say what we're seeing the most, and this is kind of unfortunate. This is due to the SBA change in policies. If you're not 100% a citizen, if that box is not checked on the application, that unfortunately that's a big red flag for us. We can't move forward with that. Uh, Potentially, the SBA is going to change that rule in the near future, but right now that's a hard and fast stop for us. hopefully that's changed soon and we don't have to.
Yeah, and we've had I know we've talked before, we have some cross-border ones in Canada and otherwise,
Mhm,
and so for us, it's always, you gotta then locate that funding. It gets a little bit more difficult, but SBA
mhm.
is there for a purpose, and if you can fit into that eligibility, it's a great, kind of platform to have. How fast can you guys get a deal done? I'm gonna take the assumption that the buyer has pre-qualified with you, right? So
Okay.
you've got comfort with this buyer. They bring you then the deal and said, "Here, I've got this LOI signed." What's the typical or how fast can you guys move from there?
I don't wanna say a number and that be, the expected standard, but what I will say is I have closed a loan once it went into closing in 15 days. Now, that's not just myself. We do have a great team in closing and underwriting here at United Midwest Savings Bank. The borrower came in well prepared. I got everything needed, got them into underwriting, quick approval. Once they were in closing, they closed in 15 days. I think all said and done, it was about a 20, maybe 25-day process for them.
And I
So,
I think that's one of the biggest things of like, sequential, like having a relationship, right? If you're going to do roll
mhm,
ups, like you guys already have the success story, you have the financials, you can hopefully get more comfortable, as we go. Okay. Another question. Banker or lawyer, who's harder to negotiate with?
I would say a lawyer.
Depends on if they're, banker on the collection side, right? No, just kidding. Yeah, I'd probably agree. But the overall aspect is, on that note, I think that's part of it where we said West and his team can be such great advisors to deal structure, is because if you are a lawyer trying to negotiate your own deal, it's great to get, other advisors involved to just basically say, hey, look, this is an okay deal, or this is a great deal, or this is where you need to come back and really help through that and everything else. Have you ever told someone not to buy this firm or this practice?
I've never said those words verbatim, but yes, I have. At the end of the day, we're going to look out for our borrowers. We want them to make a great purchase, but to follow that up, we're also looking out for the bank as well, right? So we're not just going to finance a loan just to finance a loan. If there's something early on that, hey, this isn't making sense, we're going to call that out, by all means. I'm never going to tell someone, hey, don't buy this, but I am going to say that there's some stickiness here that I think we need to figure out and get a true understanding that, what's going on with these financials. If you're okay with that and, want to move forward, we certainly can do so, but we're going to need a, explanation from you saying that, hey, I'm good with this.
What's the one thing you would tell lawyers out there looking to get a loan, right? Or, pre-qualify their firm that they should start doing now and go ahead and prep that would just make the world easier on the financing side of things.
Yeah, I mean, it really, if depending on how soon they're looking, again, give me a call. Let's get those conversations started. But again, really starting to think about what that package is. As we talked about earlier, Tom. Another example given from the Law Practice Exchange referral, a seller was really trying to put together a good package, and I explained to her the SBA expansion product. She had a buyer in mind who already had operations. And I explained to them that, hey, SBA isn't just for first time acquisitions. We can finance 100% of that for him and he doesn't have to pay a dime. At first, it almost seemed that she was, well, I think he might be a little too prideful to work with the SBA because it's not a first time acquisition. But as soon as I started explaining that we can do 100% of that, it really started, since her ears opened up and said, that's actually a good package to present to them for it. So, I would definitely say, understanding the package, what you're bringing to market, and just starting those negotiations early, those talks
Absolutely.
early.
Well, before we close out, I do want to kind of talk about similarities because you've been, funding and in the professional practice world for a long time, specifically because it's been a more established market in accounting and CPA practices. It seems, at least from my take of kind of watching both industries and everything else, that law is following suit. And I've had lots of conversations, Weston, with lawyers recently who have law firms, but they're looking at our brand for our firm is this, but we'd love to have another law firm and acquire something, but it just doesn't fit into our current. So they've formed an MSO or are looking to form an MSO.
Mhm.
They can still come to you for financing, I assume, correct? For those acquisitions.
Yeah, for tax and accounting, I personally have not seen that structure. Typically, what we see is, there may be a new entity created for the expansion, but yeah, as far as I'm aware, MSO structures are fit the mold as well. Now, keep in mind, anyone that's within that has 20% ownership would have to guarantee the loan. So that is a requirement from the SBA. So that could create, multiple guarantees on the loan. But as far as, say tax and accounting, I have not seen that structure yet.
And where have you seen accounting go as kind of an overall market, right? Say over the last 5 to 10 years.
Activity is picked up tremendously. Now, again, it is a bit seasonality or does have some seasonality due with the tax season. The deadline just happened, so we're starting to see it ramp up already. Private equity has been in the space that's driving multiples up. I would say our typical deal size is a lot higher than it used to be, which kind of gives me the understanding that these accountants are seeing what's going on and they're kind of cleaning up their practices and getting ready to sell in the years to come. But whether they're looking to go the PE route and just get as much cash as possible and go enjoy vacation, or there's still some that still really care about, hey, I built this from, the bottom. I've put a lot of blood, sweat, and tears into this, and I still go to church with half my clients, even after closing. So there's still some that really want to see just a good buyer in there versus the private equity come in and what happens happens.
Yeah, I think that's the biggest thing we've kind of talked about in law. Private equity coming in, they are one type of, they're really an investment partner, right? They're
Correct.
not, truly an acquirer, but it's one new option that maybe wasn't in the market, a couple years ago. All right. I said last question, but I got one more. So that leads to, because you said it, it leads to you guys can also help loan or for growth, just overall, like, law firms that want to say, look, I want to invest in our own growth and carry that forward. I'm not looking to acquire something. I'm not looking to, sell right now, but I
Mhm.
just need capital to grow. They can contact you.
Absolutely. Yeah, we can do a simple working capital loan that you don't have to, as you stated, acquire another business. We absolutely can help that out. And, please, by all means, if that's what you're looking to do, give us a shout. We'd love to help you out.
All right. Last question. I promise it's an easy one. Where can people find you?
My email address is going to be WHOLLEY at UMWSB.com. And, I'll even get my cell phone out if that's allowed, Tom. By all means,
Sure.
give me a call. And yeah,
Sure.
910-470-7701. The way I operate, I'm on my phone 24/7. If I don't answer immediately, I'll call you right back. So,
Yep. And we'll put, again, we've got your guys' contact. We'll put that in the show notes and kind of carry that forward. Weston, I greatly appreciate you taking the time. I know you guys, especially coming out of tax season, like things really kind of, ramp up for you quickly. So I appreciate you taking the time. Give the best to Daniel and Shannon for me. Right? Because overall, even if you're not looking to do a deal in 2026, otherwise, getting the perspective of an expert lender, somebody who specifically knows SBA, financing goodwill, with law firms and professional practices, huge, right? So, Weston, thanks for sharing all your knowledge with us. Look forward to catching up with you soon. And everybody else, we'll see you the next time on the exchange.
thanks, Tom.